Good morning everyone and welcome to my daily report market videos with me, Richard Perry, market analyst at Hantec on Wednesday 19th of June. It is the day of the FOMC meeting and this is a crucial meeting I think. This is going to be a meeting whereby the market finally finds out whether the Fed is going to pivot dovish or not. Now, in front of this meeting, or yesterday, we had the announcement from Donald Trump that he was going to be meeting up with President Xi of China. Now, this is also a crucial factor for markets in the coming days. It really saw risk appetite spiking higher yesterday, equity markets soaring higher. We saw gold coming back. We saw general risk appetite improving and certainly helping to drive a shift in market sentiment. Now this is really important because it obviously means that in the run up to that G20 meeting, risk appetite is going to have been improved because the prospect of a trade deal is sort of going to be now priced back in. Seemingly previously the market had been busy pricing out the prospects of a trade deal between US and China. Now, how does this impact on the Fed is the real question today. The markets had been anticipating 3, maybe even 4 rate cuts in the coming 12 months from the Fed. Now, you're starting to see that expectation coming back a little bit, but we've got this FOMC meeting today that the market is likely to be expecting some sort of easing bias coming through the statement, maybe the dot plots and also the projections from growth and inflation. No rate cut explicitly is expected today, but the market is still anticipating around about an 86% probability of a cut in the next meeting in July. And how the Fed guides for that potential rate cut is going to be crucial. So how that's going to be the key risk reaction tonight. What we've seen in front of that, a little bit of an uptick on the 10-year and 2-year Treasury yields as the markets of risk appetite has improved. Interestingly, look at the oil price. Big jump in the oil price yesterday. 54.85 is the resistance on the June high on WTI. If it breaks out above that on a closing basis, that is a key turnaround in the outlook there. And also what we've seen is the dollar picking up yesterday. We saw a euro coming off. That again, another factor yesterday is that Mario Draghi talked about further easing measures from the ECB, and subsequently the euro fell back. So these potentially some key moments here for these currencies. Now, in terms of data points today, you're also looking out for UK inflation data this morning, expected to come back to 1.7% on core, 2.0% on headline. That's at 9:30 today. We're also on the lookout for Canadian CPI at 1:30. Canadian CPI at 1:30, expected to actually improve on the headline CPI to 2.1%, interestingly enough. Now, we've also got the 3:30, the EIA oil inventories, which are expected to see a drawdown of 1 million barrels. Following on from the last couple of weeks, which has seen surprise inventory builds. So 1 million barrels would be the biggest drawdown for 6 weeks. So watch out for that having an impact on oil. But yeah, lots going on today, but we're still going to be likely to see a consolidation in front of the FOMC. And that's pretty much where we're sitting at. A little shade of dollar weakness, but generally speaking, little real direction across Forex majors or equity markets. Now, my chart today is the French CAC 40. Now, we saw a really significant turnaround on the dovish and easing suggestions from Mario Draghi yesterday, and we've seen that come through a spike higher in the French CAC 40. Now, that move higher has gone above the resistance band 54.30 to 54.50. This sort of pivot band over the past 3 months or so, closing well above that. That base now becomes a basis of support as a pivot band. But it's interestingly enough, I spoke about this on the Dow analysis in the morning report today. Is this a bull flag? Is the question. Is this a bull flag now? So you'd be measuring that from from the low, and it actually comes to 56 area, just above 55,600, and I think that we could well see a retest of that April high, following on from that move. Now, obviously, it comes with a big caveat. Maybe the Fed tonight is not dovish at all. It is possible, but it's unlikely that the Fed it cannot meet the market's expectations of how dovish it's gone, and subsequently the Fed disappoints the doves, and equity markets have a big corrective move. Not necessarily likely to pull the French CAC back as much, maybe as the DAX potentially, but still, I think we're likely to see any sort of move back into 5,450 to 5,430 area as a basis of support for what is still likely to be further gains in due course. So with that in mind, I wish you good luck in your trading. Here we see the hourly chart, and you can see the band of support. You can see the momentum indicators strong. Any unwinding move is a chance to buy. So I wish you good luck in your trading, and I'll speak to you later.